Hey guys, welcome back. In today's video, we are talking about the AMC 3X, Adam Aron's announcement, the market crash, and many more in this video. First, we're taking a look at this. No, they're not invincible. Actually, the AMC price movement, including the recent near all-time low drop, is pretty similar to that in April-May last year, right before the 300% single day sneeze, expecting something several orders of magnitude larger down the road. So we've seen this happen before for AMC, and we're seeing how AMC is doing right now. Once again, with historical data, we've known that at these prices for AMC, you tend to see a lot of people start accumulating, whether it's retail or institutions. And what we are expecting from the past is that we are obviously looking at a huge volume breakout for AMC. Something else that I want to obviously add into this is the fact that a lot of things have of course changed. AMC once again is at a better position right now than we were a year ago. But not only that, the difference between this time and last time was that last time we were seeing the retail accumulating, we were seeing institutions accumulating. However, this time, when you look deeply into the institutions that are accumulating, it isn't the ones that have always been long or AMC or new institutions coming in to buy AMC. But this time, we are also seeing how previous short sellers of AMC have not only sold their short positions, but have actually gone long and started to accumulate AMC. We've talked about this with Goldman Sachs, we've talked about this with our few, and we've seen how on the surface, Goldman Sachs has got rid of their short positions, has got rid of their put positions, and starting to buy into longs and calls for AMC. Now, this doesn't mean that they've obviously covered the synthetics, which is not shown on the filings, but it doesn't take away from the fact that the previous short sellers who were once openly trying to short AMC, who were very vocal about shorting AMC, have obviously flipped long and started to buy shares of AMC. And so that shows us why things are different right now. And once again, when you account for the fact that a year and so has gone past, there's been a lot more synthetics that has now been created. When we do see the liquidity getting tight for these short sellers, we are expecting a massive volume breakout. And last year we saw 300%. This year we can easily see go way higher than that. And so with what we've talked about, and along with the fundamental factors that we're going to talk about, you can understand and expect AMC to have a massive movement. The next thing is Adam Aron's It's a Big World. We've announced this morning that AMC Theater Distribution will be taking a highly anticipated Taylor Swift event all across the United States and to some 50 countries globally on October 3rd, 4th, and 5th. And so Taylor Swift, the official release party of a showgirl, should be in about 110 countries by the end of October. So we've obviously talked about how big this is for AMC. The reason why is not only is this going to obviously produce numbers for the box office, but also the key part here for AMC theaters. This is not only indirectly affecting AMC, but also directly affecting AMC, as AMC is the ones that's obviously distributing this event. We've already gone over how Taylor Swift's team went straight and directly to AMC, as opposed to the last show, which they went to a different studio first before going to AMC. And so we talked about how this is obviously the beginning of a massive thing to come for AMC, as we're going to be seeing more and more people go to Adam Aron, going to AMC film distribution for things like this. At first it may be artists, but I definitely expect it to obviously grow to something even bigger than that. And so this is also one of the reasons for why people have been accumulating AMC, because they see the potential of AMC. Not only is AMC operating well to make sure that they benefit and profit a lot from the growing box office, but they are also trying other ways to not only increase the box office, which improves the first factor we just talked about, but also doing things that increases their revenue and improves their company as a whole. So you can understand why people are trying to invest into AMC right now. And then you can see it from the apes as well. Now this is from Still Up, which someone we've talked about yesterday as well, another fellow ape who have bought even more shares of AMC. And this is just one of the many apes that are obviously out there who are constantly doing this. And we've already known for a very long time now is that apes have been continuously buying shares of AMC, and only a small portion of that is actually selling their shares. And even if they were selling their shares, it's unlikely that they've sold all of their shares. And we've seen this because we've seen from the inflow outflow of capital is that there are more shares being bought than there are more shares being sold. And the reason for why we talked about the constant suppression is because we have data like the dark pool. You can see 68% of volume is now being routed off exchange, and you can see here for AMC, and it's why we talked about the fact that don't be blinded by the price movement of AMC on the chart, because when you understand what's actually going on, there has constantly been people buying, whether it's the retail, the apes, or if it's the institutions. But the reason for why we're not seeing that reflect on the chart is because, and we do this on the daily, where we daily update the dark pool volume, is because we're seeing an excessive dark pool volume for AMC, and they're stealing away all our volume. And then you can take a look at over here for why these market makers are doing this. Another reason for why they're trying to suppress AMC. If you're a market maker and you know a large amount of buy side volume is going to come in for a stock, and you not have enough of that stock to comfortably make a market, you might manipulate the price of said stock downward during off hours, when option hedging is not a factor. It's cheap to do this due to the lack of resistance from option hedging and the general low liquidity environment. Pushing down in pre-market allows you to acquire more of that stock by triggering stop losses at open, acquire more of that stock by pushing it down below key hedging levels, activating options market makers selling, and acquire that stock alongside a large buy volume coming in at cheaper initial prices. So this is what we've talked about with why we see this institution constantly try and suppress AMC and GME, whether it's pre-market or after market hours. And during the market hours, you've obviously seen them increase the dark pool volume. And ultimately, all of these things that they are doing, it's whether it's to force the retail to sell their shares or for them to accumulate shares at a cheap price. We've said at the start of the video, institutions have been increasing their accumulation of AMC and GME. But not only that, the more important factor is how short sellers also wants to buy shares of AMC and GME. And for them, they obviously want to buy it as cheaply as possible. Not only because they want to try and hedge their shorts and to buy as many as possible, but also to cover some of their shares as cheaply as possible. But once again, we've known that they can't cover the synthetics. They can only cover what they're showing in the open. They can only cover the real shares of AMC, the float that should exist, not the 10x float that does exist out there, because they rehypothecated so many shares. And then you're seeing why we're seeing, these firms panicking right now. US stocks may surge another 20% before historic crash, says Blackthorn Swan. And what we can see is this, how the panic-stricken hedge fund calls for historic market crash. Now, we've already covered so many factors, and we're going to be looking at it as well from another perspective about how there's been so many indications and caveats in the market. And now, the reason why this is a big problem is because when these market crash happening, it's going to have a massive effect on these institutions with their collaterals. And when their collaterals go down, they won't be able to finance some of their positions, especially when you understand, and we've talked about this, AMC is a recession-proof stock along with the industry. And so if we are seeing a recession, if we are seeing a market crash, the stocks that you won't see be heavily affected will be stocks like AMC. So you can imagine what will happen when the AMC position stays the same, but all their collaterals in all these other, whether it's tech firms, whether it's all of these energy firms, or whatever they're invested in, are all crashing and AMC staying the same. Hence, forcing their liquidity to get even tighter. And that's when we're going to be seeing them obviously try to cover their positions or sell off all of their other positions, which will then cause the market to crash even further, which then improves what we just talked about with how that affects them as we see their collaterals fall. So this is the checkmate we're really waiting for as we're seeing these shorts get lacking with hedge fund, these shorts lacking with liquidity. Another thing to look at, and this is the reverse repo. And once again, we have to understand. So reverse repo is at 25 billion right now. And last time we covered it, it was at 13 billion. Now, it's not to panic to suddenly see it go up 12 billion. Like we've said, we are seeing it fluctuate. It wouldn't surprise us to see the reverse repo go up, especially at a time where the short sellers are in need of money, where we're seeing so many illiquidity problems happening right now. But the thing to take away from here is that firstly, when you take a look at the long term, reverse repo is dropping. Wherever you take a look at the 30-day average, the 60-day average, you'll see the reverse repo dropping. The very fact we are seeing the reverse repo going from 12 to 13 to 25 should already show you the fact that these shorts are in need of money. And so when we do see it go to zero, which we will, that's when the shorts are going to be panicking, and that's when we'll see them start covering. As always, none of this is ever financial advice, so do take us as a grain of salt, make sure you do your own due diligence and research, and I'll catch you guys next time.